Taxes, taxes, and taxes. How many of you want to pay more in taxes? I didn't think so. I'm going to teach you today how you can spend less in taxes every year because of having an in-home based business. So with your unit, you also have the opportunity to help people. I mean, how many of you don't like to help people? I don't know anybody that doesn't like to help people, right? So here's how this is going to look. You have an income from your job. The income you're going to get paid on, you have to pay taxes. So average right now in the US, the average household income is around $54,000. That's between you and your spouse. Now you're going to have a standard deduction, which is around $16,000. So after that, you're left to pay taxes on that money. So it depends on your tax bracket and all your different deductions coming through. But most people end up overpaying in their taxes because they don't have any deductions. So I'm going to show you what a deduction is and how this unit is going to play into a role with that. All right, so now that you have your Kangen unit, let's imagine here that you were left paying taxes on $30,000. So you would have to pay taxes on $30,000 because that was your taxable income. So our goal here is to get that taxable income down as low as we can so you don't have to pay more taxes. So with your purchase of your SD501, your K8 unit, let's just imagine it was a K8, you're going to spend around $5,000. So from the $30,000 now, because it's a business, you can help people with the intention of helping people. You actually have to have the intention. Now you would subtract $5,000 from that. Now you're left with $25,000 to pay taxes on. Let's just imagine you're like me and you love to travel. You can go anywhere in the world and share this amazing opportunity. Let's say we want to go to Hawaii, right? All right, let's jump on a plane. Oh, the plane fare, that was $1,000. And I wanted to bring my husband too, he's part of my business, that was another $1,000. Then we get there and we had the hotel expense. That was a $2,000 investment because, golly, we had to stay at a nice place. So now you have the $2,000 for the airfare, you have another $2,000 for the hotel costs. Then we had some meals. We ate really well and we talked to a lot of people when we were there. We set up some water centers. We might have handed out some water because we had our K8 machine with us. And these meals and the things we were doing around, that cost us all together $5,000. And that was now a business expense because your intention when you were traveling there was to set up appointments with people and start a business in Hawaii. So now we had a Hawaii trip. Let's just imagine it was $5,000. And how many times a year would you like to travel? Let's say on average you're going 2 to 3 times. So let's just say that you went 3 times. That would be $15,000. Maybe you wanted to go to the Philippines or you wanted to go to Mexico and you wanted to share this amazing business. Now we have $20,000 of deductions right there. What about your cell phone? Every single day you're texting people about the water. You're answering phone calls. What about your house? Part of your house is a tax deduction because you have people coming in and out. Your computer, your laptops, you can live the laptop lifestyle, your internet, your utilities, now becomes part of a tax deduction. What about your car? This is a very popular one, your car. The government will give you money for driving, tax credits basically. So when you're driving per mile, the government is going to give you a percentage back. And so it depends on, what kind of vehicle or what avenue of taxes we decide to go with, but there's a couple different ways to write off your vehicle. And the one that I love is under tax law 179. That allows you to write off the whole entire vehicle. So if I decided tomorrow to go out and to buy a new Tesla that was $100,000 and my taxable income was $100,000 and I'm in the 35% tax bracket, I would have had to write a check to the government for $35,000. But because I bought the Tesla and it had over 6,000 pounds of gross weight, I can write off the whole entire thing the very first year. So now the Tesla, let's just imagine it was $100,000, right? You can write off the whole thing. That's $100,000 reductions. Now, it would only really work for you if you actually made income of $100,000. I wouldn't have to pay the 35%. My income would be 0 at the end of the year. But for a standard car, let's just imagine that your vehicle was You went per mile, and the government gives you 55, depending on what year it is here, about 55 cents per mile while driving. So if you drove, let's just average it out. Let's say you drove 10,000 miles for your business. So 10,000, that was delivering water to people that you know. That was, when you went on a vacation to Oregon coast, you also went for the intention of helping people. All those things you can write as a taxable deduction. So 10,000 here miles at 55 cents, doing the math in my mind, I believe that's around $5,500. Okay, so that's another $5,500 of a deduction. So at the end of the year, when you go to file your taxes, you can also come to us. We have a tax agency we work with that will help you with this. Just let us know with an email to support@amandabobbett.com. Be happy to help you with this. So you have the 5 plus the 15, you have 20. Then you have your miles, so you have around 25,000 or so of deductions. So now at the end of the year, instead of you having to pay here $30,000, now you have to pay your taxes based on that amount. You are left to pay taxes on $5,000. So in that tax bracket, chances are you might even get money back. Isn't that cool? So that is how you save money in your taxes, because of owning an in-house based business. It's one of the smartest things that you can do. So I'm so happy and grateful that you had the education here behind why you want to own a business, and it's so smart for you to get in business for yourself.